What if I told you that right now, in January 2026, there are 5 companies that could supercharge your portfolio for years to come? We're talking leaders in the biggest trend of our time, artificial intelligence. But miss the boat, and you might watch your money grow a lot slower than it could. Today, I'm breaking down my top 5 companies to consider investing in this month. Perfect for beginners and intermediates looking to grow their wealth smartly. Stick around till the end for my #1 pick that's dominating the AI space. Let's dive in. First off, why focus on investing in 2026 right now? The world is changing fast. AI isn't just a buzzword anymore. It's powering everything from your phone apps to massive data centers. Recent market data shows AI spending is projected to keep surging, with the global economy stabilizing after years of ups and downs. Interest rates look favorable, inflation is cooling, and companies leading in tech are poised for strong growth. These picks are based on current trends, analyst consensus, and solid fundamentals, things like revenue growth, market dominance, and innovation. They're great for long-term holding, especially if you're between 20 and 45 and building wealth step by step. Quick disclaimer: this is educational content only. I'm not a financial advisor. Investing involves risk. Past performance doesn't guarantee future results, and you could lose money. Always do your own research, diversify, and consider your risk tolerance. Okay, let's count down from number 5 to my top pick. Starting at number 5, Meta Platforms, the company behind Facebook, Instagram, WhatsApp, and more. Meta reaches over 4 billion people monthly. That's half the planet. They make most of their money from digital advertising, which is booming as businesses shift online. Why consider Meta in January 2026? They've been laser-focused on efficiency lately, cutting costs and boosting profits. Plus, they're pouring AI into their platforms. Think smarter ad targeting and new tools like AI-generated content. Analysts see strong revenue growth ahead as advertising rebounds in a healthier economy. Recent data shows their margins are among the highest in tech, and user engagement keeps climbing. Pros: dominant market position, massive cash flow for buybacks and dividends, and huge potential in AI-driven ads. But fair warning: risks include privacy regulations, competition from TikTok, and shifts in user trends. It's not bulletproof. Practical tip for beginners: if you already use their apps daily, that's a sign of their stickiness. You can start small with fractional shares on most brokers. Meta could be a solid foundation for growth in the digital world. Moving to number 4, Alphabet, Google's parent company. Everyone knows Google Search, but they also own YouTube, Android, and a fast-growing cloud business. Search alone is like the gateway to the internet. In 2026, Alphabet shines because of AI integration. Their Gemini model is competing head-on in generative AI, improving search results and creating new features. YouTube is crushing it with video views, and Google Cloud is gaining market share for AI workloads. Market reports highlight double-digit growth expected in advertising and cloud services this year. Pros: near monopoly in search, diverse revenue streams, and tons of cash for innovation. It's one of the most profitable big tech companies. Cons: antitrust lawsuits could create uncertainty, and AI competitors like new search engines are emerging. Real-world example: think how Google has become a verb. That's brand power that doesn't fade easily. For beginner investors, Alphabet offers stability with upside, a great mix for long-term wealth building. Number 3, Amazon. Way more than just online shopping. Yes, they're the king of e-commerce, but the real engine now is Amazon Web Services, or AWS, the world's largest cloud provider. Businesses run their apps and AI models on AWS. Why 2026? AI demand is exploding cloud spending. Analysts point to AWS as a high-margin growth driver, with e-commerce still expanding globally. Recent trends show Amazon optimizing costs while innovating in logistics and streaming. Expect continued strong performance as more companies go digital. Pros: unmatched scale, network effects, hard for competitors to catch up, and diversification into profitable areas like advertising. Risks: intense competition in retail, regulatory scrutiny on dominance, and economic slowdowns hitting consumer spending. Tip: many of us are Prime members. That's recurring revenue that builds moats. If you're new to investing in 2026, Amazon is approachable because it's a household name with real-world impact. Coming in strong at number 2, Microsoft. From Windows and Office to Xbox and LinkedIn, but the stars are Azure Cloud and AI tools like Copilot. Microsoft is perfectly positioned for 2026 because they're embedding AI everywhere. Copilot helps with productivity in Word, Excel, Teams, making work faster. Azure is neck and neck with AWS for AI infrastructure, and their OpenAI partnership gives them an edge. Market data suggests robust growth in enterprise software as businesses upgrade for AI. Pros: recurring subscriptions for steady cash, dividends for income, and leadership in business tech. It's often called the safest big growth stock. Cons: high valuation means it needs to deliver, slower consumer segments, and dependency on corporate spending. Motivational note: Microsoft has turned early investors into millionaires over decades through consistent innovation. For beginners, it's a confidence builder, reliable with exciting upside. And my number 1 company to consider in January 2026, Nvidia. Nvidia designs the chips, GPUs, that power AI training and running. They're the picks and shovels in the AI gold rush. Why top spot? Demand for AI is insatiable. Data centers need more powerful chips, and Nvidia dominates with over 80% market share in AI accelerators. Recent analyst reports call it the best positioned for continued explosive growth, with new products driving the next wave. Pros: insane profitability, innovation leadership, and broad applications from gaming to autonomous cars. Big warning: it's volatile. Stock can swing on news, competition from custom chips is rising, and if AI hype cools, it could dip. Always size positions wisely. But for long-term believers in AI transforming the world, Nvidia stands out as a potential wealth creator. There you have it. My top 5 companies to consider investing in January 2026. 5. Meta Platforms. 4. Alphabet. 3. Amazon. 2. Microsoft. And number 1, Nvidia. These are leaders in AI and tech, with strong fundamentals for potential growth in 2026 and beyond. Key takeaways: focus on long-term trends like AI, diversify across a few quality names, and start small if you're new. Investing in 2026 could be your stepping stone to financial freedom. But remember, patience and education are your best tools.